So today we are going to be learning a very interesting topic which is going to be about capital gains. So let's assume for instance Shah Rukh Khan. So let's assume Shah Rukh Khan is very sad now because he has two houses in Mumbai and a piece of land and few shares. Now Shah Rukh Khan has so much of money. He is sad because now he wants to buy a next house. So he will have to pay capital gain tax. So when you would have bought the second house, you would not get the capital gains exemption on buying the third house. That is why even Shah Rukh Khan is sad. Now I have a hack, a solution which even Shah Rukh Khan can use to buy his third house. So let us stick to this video and pay good attention. Before watching this video, please subscribe to my YouTube channel so that we don't miss out on more informative videos like this. So let's begin. So in this video I want to tell you all, if you buy a next house or if you sell a piece of land or shares or anything that you own, you will have to pay a capital gains taxes on it. We're going to learn how do we gift assets to our family members so that we get capital gain exemption. So this hack is going to help you to save your taxes, which is going to give you strength to your financial goals by saving taxes. Every year, most of the people pay a huge amount in taxes for their capital gains by selling shares or house. And if you're paying, write in the comment section. Last year, the government has changed the tax rates. Earlier, the long-term capital gain tax was 20% and now it is only 12.5%. Let's take an example. You bought a land for 1 crore rupees and you sold it for 2 crore rupees. So from this 1 crore rupees, the government is going to take 12.5 lakh rupees in the name of capital gain taxes, which is 12.5% of 1 crore. If you follow this proper plan of gifting in your family members, you can save up a huge amount of taxes like this. Now Shah Rukh Khan is very successful. He have two houses and want to buy third house. He also has lands and shares. But as soon as he thought of buying a new house and selling the old houses, he has a problem. Since he already owns two houses, he will not be exempted under the section 54EC. What happens here is, if you bought a house for 1 crore and you sell it for 2 crores, the profit of 1 crore, if you reinvest it in a flat itself, in that case you do not have to pay any capital gain tax. You do not have to pay that 12.5% also. This happens only once in your life. That is, when you buy the second flat, you do not get this benefit in the third flat. So let's understand this idea step by step. Now let's assume you have a land worth 1.5 crore and that land today is worth 2 crore rupees and you have gifted that 2 crore worth land to your daughter or your son or children or anyone in your family. So on this, you are going to be charged 1% on cess and 200 rupees on stamp duty because this is being gifted in the family members itself. So you will also not be charged any income tax. So Shah Rukh Khan's land acquisition cost, which was 1.5 crore rupees, and on top of that 2 lakhs on his stamp duty, and the total comes up to 1 crore 52 lakh rupees. Now this property he sold it on 2 crore rupees. So his profit comes up to a total of 48 lakh rupees. Now if Shah Rukh Khan would have made this profit, he would have been payable 12.5%, comes up to a total of 6 lakh rupees. And because now he has gifted his daughter this asset and his daughters, this is the first asset, they are going to save that 6 lakh rupees capital gain tax, and that 6 lakh rupees is going to become a total of zero. Now that 48 lakh rupees what his daughter has, that amount can be reinvested in a new house where they will be benefited under the section 54F and 54EC. Now let's also assume if Shah Rukh Khan also had shares worth 1.3 crores and today those shares value is 1.8 crore rupees, and in the same way he has gifted his 1.8 crore worth shares to his daughter, on which stamp duty is going to be 2,700 rupees. And because this is being gifted to a daughter, to a child or one of the family member, in this case also you will not have any income tax. Shah Rukh Khan's daughter's acquisition cost also will be considered 1.3 crore rupees only. So when she sells the shares for 1.8 crores, the profit of 50 lakh rupees, there will be no capital gain taxes added on that, and she will not have to pay that 6 lakh rupees, which is 12.5% of capital gain taxes on that profit of 50 lakh rupees, because this long-term capital gain she can reinvest on an asset, on an apartment or whatever. So basically, using the strategy of gifting, this family, Shah Rukh Khan's family, have saved 12 lakh rupees on capital gain taxes, and also bought a new house what he wanted to buy, and he also didn't have to pay any tax to the government. So whenever you follow these kind of steps, you need to have proper paperwork for the tax authorities of India, because paperwork is only considered as the ultimate truth in the court. So you need to hire the right legal consultant who is going to do the right paperwork for you, because you can't mess up in that area. So let's also talk about what are the right legal documentations what you need to have, and also let's talk about what are the risks that you can have. You need to have a proper property gift deed, and that gift deed has to be registered under the proper legalities. Metro cess and whatever payable registration cost has to be paid completely according to the income tax rules. You need to declare all the assets and all of your investments correctly, or else it is going to be a big trouble to you. So now you might be thinking, we understood this concept. Will the government not understand this and going to come after us that we are saving up 12.5% of tax? Is this even safe? So let me tell you, this is totally safe. Just that you need to follow few proper regulated steps. If you are gifting this to your spouse, your wife or your husband, so income tax is going to sometimes see this as your income itself. So think before gifting to your spouse. But remember, if you're following these steps for some big investments and big returns, like where the profits are about 3 crores, 4 crores, and there are extremely big tax exemptions happening in that case, so you might be charged anti-avoidance rule, where you will have to pay the tax and you cannot avoid the capital gain taxes. So obviously there are certain risks if you want to save the taxes, if you want to save the money of 12.5% on such big investments. But definitely this is not a big risk that you have done a criminal activity. So it's not that big risk. You have just made sure to use the right rules what has been provided by the government. So we all need to remember, financial freedom does not come by only earning money. Financial freedom comes by managing your money mostly. A lot of people in this world know how to earn money, but they do not know where to spend their money, or how to manage their money, or how to double their money. So that is what we are learning over here, friends. So if you like this video, please subscribe to my channel so that I can get more informative videos like this for you. And see you until the next time. Jai Hind, Jai Shri Ram.